प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Very good evening. Thank you for being with us here on the Business Today TV show. I'm Chaiti Narula getting you all the top stories. Let's begin with the top headlines this evening first. Economy at the pre-COVID levels. India's GDP grows at 8.4% in Q2, marking fourth consecutive quarter of expansion. Rajya Sabha debates cryptocurrency for the first time. No word yet on when the regulation bill will be tabled. Finance Minister says the all-new bill is not rehashed version of the old legislation. Markets failed to hold on to the intraday gains, close in the red at the end of a choppy session. Sensex stumbles over 1,100 points from the day's high. Go Fashion makes a blockbuster debut on Dalal Street. Lists at a premium of 90%. Rakesh Jhunjhunwala-backed Star Health IPO gets cold shoulder on day one. Indian techie Parag Agarwal takes over the reins of the internet of Twitter from Jack Dorsey. Joins the esteemed group of Indian origin tech leaders heading Google, Microsoft, IBM and Adobe. The Indian economy is limping back to normalcy from the blow that it faced because of COVID-19 and many other factors. The latest GDP figures released today show the economy growing at 8.4% in the July-September quarter, which is Q2. This is the fourth straight expansion in the economy after the shrinkage that we witnessed during the pandemic. Amongst the individual sectors now, the agricultural space grew at 4.5%, same during April-June quarter. The hotels and transport sector is the next one that has grown well at 8.2%, reflecting the increased activity as the economy reopens. In fact, the manufacturing sector grew at a healthy 5.5%, much slower than the 50% seen in the previous quarter. Financial services grew at 7.8% in the July to September quarter. Let's now listen into what CEA KV Subramaniam had to say about the state of the Indian economy.
This data clearly shows that corporate income and profit are above the pre-pandemic level. It is important here to not get subjected to the rhetoric that the formal sector is not important for job creation. As we have clearly seen, job creation in the formal sector is very important because those are the ones that provide high quality jobs. So the lack of distress or the fact that the corporate sector has emerged well from the crisis is something that means a lot for demand as well and for overall equity in society, through job creation. So the corporate sector, formal sector especially emerging, is important.
Taking this straight across to BTTV's managing editor Siddharth Zarabi, who is now in conversation with Madhvi Arora, the lead economist from MK Global Financial Services, to decode these numbers that have come out. Over to you, Siddharth.
Madhvi, I want you to begin by explaining to our audience what does this 8.4% mean in terms of the wider economy?
So as you rightly said, the first thing is that the data clearly affirms the fact that the economy continues to be mend, and most likely will be back to pre-pandemic level before end of this financial year. High frequency data has been indicating that on the back of easing lockdown restrictions, rising pace of vaccination, and mobility has clearly sort of helped improve the service sector, which has been a laggard as far as the growth recovery is concerned. So I think this quarter sort of clearly is led by services, which again has seen a biased improvement more in real estate sector, partly on account of the fact that we have seen ultra accommodative financial conditions with regard to real estate segment, and also the fact that the government spending in this quarter has been higher both by center and states. Both of them essentially have impacted the services sector much more, and this quarter is clearly led by services, which has been a laggard in the past, wherein the improvement was led by agriculture and followed by manufacturing to some extent. So I think services. Yes.
Madhvi, explain to our audience, and while many of those who are watching you know that this is a quarter-on-quarter previous financial year, year-on-year comparison, what explains the decline at least from the headline number, from Q1 to Q2, the 20.1 to 8.4, do help deconstruct that.
Sure. So that is purely a base effect story because, you saw the previous quarter, 20% growth was essentially on account of the fact that it sort of reflected the pandemic year impact getting reversed on year-on-year basis. Now that seems to have waned in this quarter, wherein we had seen last year, same period, some improvement in growth. But that said, when you see on a sequential basis, which is quarter on quarter, the improvement has continued in the growth momentum, which shows that even though you are seeing a slowdown from 20.1 to a 8.5% kind of a growth picture from first quarter, second quarter of this year, on a sequential basis, you have seen the continuous improvement in the growth levels. So that is one. And the fact that you are seeing a waning base effect, that has essentially led to the lower growth number that you are seeing on a quarter on quarter with respect to previous year, the same period. So that is why probably you're seeing a correction in growth. But on a sequential basis or on a quarter on quarter basis, there's actually been an improvement across sectors.
What parts of the economy are doing well when we look at the disaggregated picture of GDP, which includes the manufacturing sector, includes the farm sector, which has grown 4.5% in the current quarter. What is this entire data set telling you in terms of what parts of the economy are growing and what are those parts which are still under some amount of stress?
So clearly what you're seeing here is one that this quarter on a sequential basis, there's been a, across sectors improvement. It is still a little skewed. And as I was mentioning in the past that, a large part of this quarter recovery is led by services. Manufacturing has actually been a bit of a laggard, partly because of the high margin pressures that the companies had to face because of high input costs. And services, of course, because last 3 quarters of, I think post-COVID, it has been underperforming other sectors, even with the recovery that we saw in the last 2 quarters. But with the, with the help of improving vaccination pace, mobility, and the fact that, the financial sector has generally been resilient, and of course, real estate, which is a big segment of services, has picked up well because of very, very low, interest rates. All of it has now meant that while every sector is largely growing on a sequential basis, this time around services has been relatively much better placed. But and most likely most sectors are going to be close to their pre-pandemic level by December or March of this year.
Let's get you an action and a sense of what happened in the intraday trading session in the markets today. The Sensex and Nifty opened in the green today with most of the sectors trading flat to positive. However, the benchmark indices closed in the red. Sensex shed off gains and closed 195 points down, while the Nifty closed at 16,982 after opening close to 17,500 mark. The intraday rally in auto, metal and other indices withered as the benchmark indices came under a fair bit of pressure. Tata Steel, Kotak Bank, JSW Steel, Adani Ports and Bajaj Auto were the top laggards in the Nifty today. The FMCG, IT and pharma space and the stocks in that space were buoyant in the trading session. In fact, Power Grid, Shree Cement, Bajaj Finserv, Titan and Tata Consumer are some stocks that were trading in the green. The Nifty saw 22 advances and 28 declines. The BSE mid-cap and small-cap indices ended with marginal losses. The markets seem to have shrugged the Paytm listing fiasco. Go Fashion made a blockbuster debut today with its share listing at 1,310 rupees, a premium of 90% over the issue price of 690 rupees. However, the investors were anxious after Paytm booked some of their gains, pushing the scrip down to a low of 1,152. The stock closed at 1,250 rupees. And Rakesh Jhunjhunwala's Midas touch has not rubbed off on one of his big investments. The IPO of Star Health Insurance failed to create excitement and was subscribed just at 12% on the first day. The company is raising a massive 7,250 crore rupees from the markets, while the retail investor portion was subscribed 64%. Non-institutional portion was subscribed 1% and the employee part was subscribed 3%. The IPO has a price band of 870 to 900 rupees. Maruti has announced it expects no improvement in the supply of semiconductors next month. In a filing to the exchanges, the biggest car maker in India has said it will continue production cuts in December as well. Maruti has slashed the production by 15% in its Haryana and Gujarat plants due to chip shortage in November. The same production cuts are expected to continue next month. Situation is much better than October when the company had cut production by 40%. Will the proposed crypto bill ban cryptocurrencies in India? When will the much anticipated bill be tabled in the parliament? Finance Minister Nirmala Sitharaman took to the upper house of the parliament and she took to the floor to answer queries on cryptos but did not really reveal the answers to these two crucial questions that everyone wants to know answers to. She, however, made it clear that what will be presented is going to be an all-new bill and not a rehash version of the old legislation. Let's listen into what the Finance Minister had to say.
Nearly 2 years ago, 2.5 years ago, when Reserve Bank of India attempted to regulate this, it was through the Supreme Court. The matter was highlighted that in the absence of a clear-cut policy, regulation by RBI also may not be proper. So that drove the attempt to have a group, and then the interministerial group worked into it, and then the policy came up, and policy was not issued out, but we are now bringing a bill and so on. Let me be clear on that the earlier attempt was definitely to come up with a bill, which the House can consider, but later, because rapidly a lot of things had to come into play, we had started working on a new bill, and this is the bill which is now being proposed, and this bill is, once the cabinet clears it, it will come here into the House. There are, with the Advertisement Standards Council of India, the ASCI, which governs all advertisements, their guidelines are being studied and the regulations that they have are all being looked into so that we can take, if necessary, some kind of a position or a decision to say how we are going to handle this. I can inform the Honourable Member.
The 3 farm laws may have been repealed, but farmers are still not vacating their dharna spots around the national capital. They have a demand. Their demand is to ensure a minimum support pricing that is paid to all the farmers for all the crops. While the government estimates put this burden at 17 lakh crore rupees per annum, private estimates are much, much lower. India Today primetime show News Track today pitted a Niti Aayog Mandarin against Yogendra Yadav on this subject. Listen in.
If the entire MSP for all the 22 crops is calculated, and then if we see the actual price that farmers get in the market, what is the total differential, sir? I made the calculation for last year. To my mind, the difference is 36,000 crore rupees, the difference between MSP price and the market price. And by my calculation, if the government adopts deficit payment and other kinds of method, it should cost you a little more than that. What is wrong with this calculation?
Can there be agreement around deficit financing, just paying the farmers the extra between what they are getting in the market and the MSP that's been set?
And the amount that I've calculated, is my calculation wrong?
Is that something which can be a middle ground to resolve this political face-off? Ramesh Chand, final word, sir.
Yes, Yogendra ji, it is not 36,000 crore. I have done the calculations, and again there are complexity in it. Since there is no time, I will give you a simple example.
What's your figure?
Whether you calculate this difference by taking national average of farm harvest price and MSP, or you take price at state level, or you take price at district level, or you consider the price received by different farmers. That will make a huge difference. That 36,000 crore will become maybe for 1.4 lakh crore or 1.5 lakh crore. Let me give you the reason why. When you are considering at aggregate, now suppose there are 5 units and they are getting a price of 300, 400, 500, 600 and 700. The average comes to 500, and if MSP is 600, the difference between average and this 600 is only 100. But when you consider the price received by each unit, you will just find that it goes to 300.
He is the youngest CEO to lead an S&P 500 company. Till 24 hours ago, Parag Agarwal was an unknown commodity, just another Indian techie in the sea of brown faces in the US. But overnight, the 37-year-old has become a sensation amongst a rising number of Indian CEOs to lead tech giants. Take a look.
He's described in an article by a US newspaper as quiet, polite, deeply technical and enthused about an internet where power and control are given back to users. But Parag Agarwal obviously has the killer instinct which has taken him to the top of Twitter, a $36 billion social media giant which made him the youngest CEO to lead the S&P 500 company. Parag's beginnings were humble. Born in Mumbai to parents who were in service, he found his groove in computer sciences when he joined IIT Bombay. 4 years later, he was in Stanford, gaining a master's degree followed by a PhD in computer sciences. Meanwhile, he did short 3-4-month internship stints in the research departments of Microsoft, Yahoo and AT&T Labs. Agarwal finally found his home in Twitter, where he joined in October 2011. In October 2017, he was elevated as the Chief Technology Officer of the company. The big moment came on 29 November 2021 when a sudden tweet from Jack Dorsey put Parag Agarwal in the global spotlight. Not only had the Twitter co-founder and CEO quit his post, but appointed a relatively unknown Indian origin man to the post with words of praise, saying Agarwal had a deep understanding of the company and its needs. Parag Agarwal responded quickly with an email to all Twitter employees. An email posted on his Twitter handle, which exploded from just 27,500 followers 24 hours ago to around 3 lakh followers currently. What Agarwal inherits is a target of doubling revenue by 2023 with 315 million monetizable users, numbers very ambitious by today's standards. The outgoing CEO, Jack Dorsey, meanwhile, pursues his cryptocurrency dreams with his other company, Square, now worth a whopping $100 billion. Bureau Report, Business Today TV.
From Google to Microsoft to Twitter to Adobe, you name it, and Indians are leading these tech giants. Desi boys are running the big tech show and calling the shots. This is the rise of Indian tech titans. Let's take a look at the top tech leaders from India who are now ruling the tech world.
The real question that needs to be asked as well as answered is, what is it that we can do that is unique?
The art of being a great leader is to lead by example. When it comes to leading global businesses, Indians have always made their mark at the international level. The tech sector is the best example of why Indians are the best and sought after around the world.
Over the years to enable this.
Microsoft, helmed by Indian-American CEO Satya Nadella, became the world's most valuable company in the world. Behind the company's transformation is Nadella's leadership, which has brought about changes in the company's culture and business focus. Sundar Pichai-run Alphabet, Google's parent company, breached the $2 trillion market cap milestone earlier this month. The recent addition to Indians heading American tech businesses is none other than the new Twitter CEO Parag Agarwal, who's been appointed by founder Jack Dorsey, who steps down. Some of the most prominent tech leaders in the US are of Indian origin, be it Alphabet CEO Pichai, Microsoft's Nadella, IBM's Arvind Krishna, Adobe's Shantanu Narayan, VMware's Raghu Raghuram, and the new entrant to the club, the 37-year-old immigrant from India, Parag Agarwal.
This is essentially India on the move, Indians on the move, and it is also consistent with our ambition as a nation to be a leader of technology in the coming decades, in the coming years. So I think what you see in the West and what you see today amongst the students are completely part of one overall story of India as a technology power on the move.
How conversation evolves.
Parag's appointment earns praise from all over the world.
Can read petabytes of data.
And Tesla boss Elon Musk said, the United States has greatly benefited from Indian talent. Musk's comment comes as a reply to a tweet by Stripe CEO Patrick Collison, who congratulated Agarwal, who has replaced Jack Dorsey, and pointed out that CEOs of all major tech firms across the globe have grown up in India.
In fact, the network performance was so good that the teams that drive.
A lot has been said in the last 24 hours about the unmissable presence of Indian talent in the global tech space. Even industrialist Anand Mahindra joined in, praising Indian origin techies heading top tech companies in the world, terming it the Indian CEO virus.
About showing courage in the face of reality.
This is a story from the inside. The meditation
Bureau
of a
Report,
sitting
Business Today
CEO
Television.
on a journey of massive transformation.
Showing that courage in the face of opportunity.
Twitter has become the latest Silicon Valley titan to appoint an Indian-born CEO, joining the likes of Microsoft and Google. And with this, Parag Agarwal has become the youngest CEO leading an S&P 500 company. But it is definitely not the easy road for him. Now he has to walk a tightrope when it comes to Twitter operations in India. Watch this special report to find out why.
A relatively unknown face and a low-profile techie, Parag Agarwal has taken over Twitter's reins from Jack Dorsey. But it is not going to be a bed of roses as he takes the top seat at the social media company, which is not sailing in smooth waters in India. In fact, Twitter's last 1 year or so in India has been rather tough. The company earlier called Indian MD Manish Maheshwari to the San Francisco office and moved him into a different role. The move was largely perceived as pulling Maheshwari out of India because there was a real risk of him getting arrested. Not only this, company has also faced challenges in court as well as regulatory after the new IT rules 2021 came into force earlier this year.
चाहे वो ट्विटर हो, चाहे वो फेसबुक हो, चाहे वो लिंक्डइन हो या कोई हो या व्हाट्सएप हो, मैं विनम्रता से आग्रह करूंगा, भारत में आप काम करिए, आपके करोड़ों फॉलोअर हैं, हम उसका सम्मान करते हैं, पैसे भी कमाइए, लेकिन भारत के संविधान को आपको पालन करना होगा, भारत के कानून को आपको पालन करना होगा.
It is in this loaded environment that Parag takes over as Twitter CEO. And he will have to walk a tightrope as company and the central government have seemingly clashed on several issues in the last 2 years. But to remain an active force in India, Parag may have to fix his company's relations with the Modi government. At the same time, he may also have to rebuild the Indian team to better grapple with the Indian reality. Bureau Report, Business Today.
That's it from me, Chaiti Narula, on the Business Today show. Keep watching India Today for all the very latest news and updates. Have a good night. Thanks for tuning in. Thanks for your time.